What's up guys, welcome back to my channel, Earn It, Save It, Invest It. In this video, I'm going to be breaking down my road to 100K or my 100K challenge. This is week 4, so I'm going to be giving an update to where I'm at, what I did in this last week, and where I stand for in the last, now it's been a full 4 weeks, so about a month of this challenge. So I'm going to break it down where I'm at and where I'm kind of headed towards, and then I'm going to quickly break down the stocks. This video is going to be quicker than my other videos, as I sometimes say in the other ones, but I will make this one faster. So yeah, let's just get right to it. If you do enjoy this video, please give a like and subscribe. That's literally all I ask. So let's break them down. So my road to 100,000 or my 100K challenge. This week started off actually kind of rough. HIMS went down, and as you can see, the 1 week performance, even the 1 month performance, but it's because of the 1 week performance. This week it went down 30 to 35% at some point. I think it was almost down 35%, maybe 33. It eventually has climbed back up in the last few days, which is what I thought would happen. But I took a major hit on HIMS. So in the last week, it's been minus 25%. And like I said, that was my biggest weighted position. So what HIMS did usually, it really determined where my portfolio was going for, this last week. But I did have some other stocks perform very well, like Nike, which went up 15%. That was on Friday, though. That was on their earnings and everything. As you can see, the 1 week performance is only 5%. But having Nike go back up, and I'm hoping that gives it, the narrative, and this gives the stock the boost of just, hey, let's push forward now and not get stuck in these 60s range. I mean, it's been stuck in the 70s as well a little bit, but it really got stuck in the 50s to 60s once tariffs hit. So hopefully we can get pushed out of that. This is all sorted by weight. So, the TQQ, I don't go over that too much. It's just the Qs. So, but it is a heavily weighted, and it did well this week. It went 10%. Celsius went up 3%. Meta went up 4%. Amazon 2%. Fubo 9%. So my best on EA4, my best performer was TQQQ. And outside of that was Fubo. And then we have Nike, Meta, Celsius, Amazon, or EA is in there too. So yeah, I did well this week, even with the drop in HIMS. As you can see, this is from June 23rd to June 27th of this last trading week. The beginning value, and even though I did go down and I went down, I still consider myself have done well. And that's because I only went down because of one position. The only reason why my portfolio went down $200 in this week was because of HIMS. And it was a lot worse than that once HIMS dropped in the beginning of the week. So to be where I'm at right now, where I started at 8,000, all right, I deposited 50. In total, my investments, everything went down 200. So now I'm at 78.66. I'm okay with that. I'm okay with that, for having one of my biggest weighted stocks take a 30 to 35% hit. Obviously, like I said, it climbed back up a little bit, but to have a day like that involved in this week and to still be down very little, I'm okay with that. In this week, me compared to the indexes, I'm down 2.5%. Again, HIMS kind of destroyed me. The Russell 2000, S&P, NASDAQ, Dow Jones, all at least up 3%. NASDAQ, of course, is usually the leader at 4.25%. So obviously I'm lagging against the indexes, but I'm fine again with that with the rest of my investments other than HIMS. Since I started this challenge, my beginning value was 73.54. Again, I started making the videos the week before June 2nd, but I really was like, okay, you know what, June 2nd, it's just the beginning of June, 6th month of 2025, that's where I'm starting. So I started a little bit more than 7,000, but started with 73.54. I've had a total of 200 deposits, right? $200 in deposits, that's $50 every week for the last 4 weeks. My investment change has gone up, $300. And so now I'm at 78.66. when you look at my rate of return compared to the indexes, I'm actually now not lagging that far behind. This week I was, but in total of this last 4 weeks, I'm not. I am lagging everyone except for the Dow Jones, actually. And not by a huge margin. Again, NASDAQ above everybody as usual. The Russell 2000, that's actually a surprise a little bit, because the Russell 2000 hasn't been a leading index in a very, very long time. So, but yeah, I'm not trailing too far behind when you start broadening out your horizon, right? You start looking a little bit more longer term. This week I bought Fubo. I bought $25 of Fubo, bought $25 of Amazon. Now, see, Amazon I can actually buy just straight $25 of, and then buy a partial share. With Fubo, I can't buy partial shares, but it's only $3.40 at, when I bought it. So I bought $24 worth, so it's close to 50. I try to get as close to 50 as I can. And then I also got Meta dividend, and I have it in the reinvesting, so it reinvested the dividends. I got, for my 54 cents, a 0.0007 shares of Meta. That's fine. I'm fine with just reinvesting it again as my portfolio grows, and as my position in these stocks grow, those reinvestments will just keep going. That's fine. 54 cents, regardless of how much it's seen as quantity in stocks, it's 54 cents in this company that will be compounded at the same rate as $5,400 into this company. So regardless of the 54 cents, it was either going to go here or go to another company, whatever. So I choose to just reinvest my dividends. So yeah, I'm going to break down these stocks really quick in terms of their charts. And I'm just going to go over it really quick. I don't want to get too technical or anything like that, just to kind of show where I think some of them might go. I did just put out a video about the stocks that I think you should be watching, the top stocks to watch in July. And I bought 2 of those. I bought Amazon and Fubo. But go ahead and check it out, because I do break it down a little bit more of those particular stocks. But I'm just going to quickly go over my stocks. So Amazon, these are all 1-year charts. Amazon is up, a little bit, but it hasn't hit its all-time high yet. Its all-time high is about 240, and it's at 223. Celsius is still well down from its all-time high. Now, if you look at where it is today compared to the low, it's up 112%. Now, I bought it in this account that I'm using for this 100K challenge. I bought it at 36. I bought it somewhere around maybe here. In another portfolio that I have it way more heavily weighted, I bought it 25. So I was buying right here at some of the bottom. If you zoom out, obviously this is, since middle or the end of 2023, it made a 77% drop from the high of 95. It just went all the way down. Now, do I believe it can hit 95 this year? No. But I do believe it's just going to continue to climb. I believe it will have a downturn. It can go back down to 36 to 33. It could easily go back down to this where it kind of consolidated, right? I can see the stock coming back down to here, hitting these levels, right? And then maybe bouncing back up. I'm not concerned about these things. I'm concerned about this bigger term, right? So if we have some drops, just like with HIMS, it's okay as long as the long-term projection and long-term trajectory is going up. EA Sports, let me go back to 1 year. EA Sports has also not hit its all-time highs yet. It's at 157. Its all-time high is around 168, 167. So it still has a ways. Like I said, it had a big fall, and that was with everybody, right? After Trump got elected and everything, there was this really big few weeks. Everyone got high on the stock market, right? Oh, Trump and all his regulatory, easing and all that stuff, and then everything just. So, that's going to happen. Fubo in the last year has had also some big jumps. They settled with Disney, Hulu, Fox, everyone to just basically have a collaborative company to do their media. And it's mostly sports, obviously. With Fubo, that's definitely their major thing is sports, but they also do live news and other TV. So I think Fubo getting in business in sports with Fox and Disney, and Disney is ESPN. I work for Fox Sports, and we have used Fubo. So I think mixing that in is going to be a good thing. I think it'll be good for Fubo. If you look at the numbers, financially, it will be a great thing for Fubo. And so when they released that information, it just jumped up all the way to almost 650. And now it's kind of come back to reality around 350. But it was hovering around 150s. It was in the ones, I had some around the 250s in another account, and then I sold. So not too happy about that, but this was also back here sometime in 2024. Might have even been earlier than that. It was in 2023, I think. Yeah, it was in this time, 2023. It was all in this whole time, and I held it for months and months and months and months, and then it kind of went down. I just sold. But I got back on the train. I got back onto Fubo, and I do believe in it. I just wasn't exactly sure what was going on, and I had other positions that I wanted to build in, and I'm okay with that. So yeah, and I did the performances that I gained because I was only at 250 with Fubo. The amount of gains that I got with those other stocks, with the amount of time that I had to do that, was definitely worth it. So I'm happy I did it. I'm just a little upset that I didn't catch it right here, but whatever. You can't get upset at that. You just have to make sure you look at the projections long term and see where it's going. HIMS, as you can see in this last year, it is all over the place. I have so many lines, right? I keep really good track of HIMS. This is where I was telling people, this is where you want to buy. This is where you want to buy, and I was saying that up here. I think it was up here, maybe down here, but I think it might have been up here because I had shorted HIMS. I shorted HIMS here, and then I sold here. It was a quick short position because I knew it was coming back down to here. And so, yeah, I think maybe this line was around the time I told people. So, yeah, maybe here, maybe over here. But I knew it was coming down to here because it always seems to touch the previous peak before going back up. So, obviously, I do believe it's going to have to go back up eventually. It's going to go up and up and up and then touch this peak. So, whenever HIMS does reach 70s, 80s, it could definitely touch back to 68. The business and the stock are getting more eyes on it. It is a very volatile stock. As you can see, it's it has a lot of ups and downs, ups and downs, ups and downs, right? So there's a chance that it could consolidate a little bit more, right? It can maybe stop being so volatile. Its market cap has gone higher, so maybe it just kind of stays a little bit more steady and lets the business catch up to their PE. But again, they're still growing, though. They're growing. So this is what's going to happen with growing companies. So yeah, I just marked all these green lines are their top, right? And then this is the ups and the downs. And when you just watch it, every time it goes down, it's going to go down below the previous peak. Right, so when it went up and up and up and it went down, it went below the previous peak. So that's how I knew it was going to go below this peak. I just knew by the last, 1, 2, 3, 4, 5, 6, 7 to 8 times that's what it's done. Does not mean, just because something has happened 7, 8 times in a row does not mean it's going to happen again. If you've ever played roulette, you know that just because you see, a lot of the times if you see 7 times red, you're like, well, this one's going to be black, right? So it's almost kind of like the opposite. Just because it's happening over and over and over and over does not mean it's going to happen again. But this company is a growth company, so the stock will perform with volatility. It's going to be going ups and downs pretty big. It's going to have some news. Any news article about it can really sway where it goes. It could easily be overbought and then quickly oversold. So that is just what I'm dealing with the stock. But I put the same amount as I put in some of the, like Nike and other ones. My position in HIMS just grew significantly So now it kind of just plays a big part of my portfolio. I'm okay with that. Meta, let's say the last year, it is now almost at an all-time high. It is just creeping with that all-time high. Meta, I believe, is just going to be an outstanding long-term play. I mean, when you look at it, this is where I started building a position. I can just delete that. That's not where I'm at now. I actually have not. These are all the drops of what I believe 10% or more. So I keep track of all the drops that it has of 10%. As you can see, it has a lot of times where it drops 10% or more, you know. And now that we're coming out of this big boost from a heavily crash, I mean, it crashed 34%. 34%. It was at 733, 735, went all the way down to 480, and now is back up within 70 days. So in 125 days, it's had a 80% swing. 34 down, 51 up. I mean, that is insane. But that's the stock market. And you have to be ready. You have to be ready to deploy more cash if you can, if you have it, or at least just be ready to not sell during when things are falling. Because the thing is, you want to be investing with money that you don't need. If you need this money, then it's different. You have to have a different strategy. This is a long-term play. I do not plan on touching this money for a very, very, very long time. I want this to grow. I want this to compound. So this is not something that I'm going to pull out. But if you are like, oh, I need this money now, then the way you deal with stocks is going to be different. The way you look at this V is going to be a lot different than the way I look at this V. So, you know, day traders are very much like that. The day traders are more in the I need this money now kind of, rather than, oh, it crashed, I'm okay. You know, really day traders are not even they're like trading during the crash. They're not holding on during the crash usually. Swing traders are the ones who hold on for a few days to maybe a few weeks. Those are the people that are really trying to just, okay, the swing, right? Like this would be a absolute swing trade. You bought here, right? And you're like, okay, well, I bought here, but then I waited 2.5 months, right? And now I'm broke even. And then I wait another month, so 3.5 months, and I've gained 15%. Gaining 15% in the stock market is an average for a year. And you could have got it in 3.5 months as a swing trader if you had timed it right. Obviously, if you timed it here, it would have been different, right? If you timed it here, it would have been a lot better. So, but I don't swing trade. I do long-term investing. I'm looking at years in advance. If something tragic happens with the company, if something happens with the business model that completely changes, then yeah, I can, you know, maybe change my position. But typically, I'm going to hold on. The other account, I do trade a little bit more. I definitely trade more. I'm like, okay, you know what? I'd rather put this money into this and this and that. I do a little bit more in my other account, which is why I was saying I had Fubo at a cheaper price, and now I don't. But I do, you know, I'm not trying to be dangerous with that one either. Nike is at 72. If you look at it, is so far from its all-time. It just went up 15% this week. Look at that jump. You're like, oh, yeah, that's good. Yeah, it's performing well. No, it's, okay. I mean, since November of 2021, it has dropped 58%. So if you have been a holder of this stock in the last 4 years, you have lost money. You actually, even if you bought during COVID, the COVID drop, you are now breaking even. A full 5 years and you are now just breaking even if you bought when it crashed. You know, if you bought right after the COVID, you're down. So, you know, Nike has not been a great performer, but Nike went through a completely fundamental change in their business, which is why it fell so much and why I bought in here. You know, so, and I'm gonna hold on. Now I'm not really buying anymore. I've built my position on Nike, and I'm just gonna let it ride. But yeah, as you can see, Nike has been like kind of like a falling knife right now for the last half a decade. For 5 years, you will have made zero money on Nike. That's insane. Last one I want to look at is TQQ. This has been a decent money maker for me. I chart this one a lot. It's had so many falls. Every one of these is 20% or more, right? Because the TQQQ is a 3x leveraged. Every 1% the Qs go up, this one goes up 3%. Every 1% the Qs go down, this goes down 3%. So it's definitely more volatile. But as you can see, we're starting to come back to completing this triangle, right? And we never really even completed this big triangle, which is very interesting. Right when we started hitting the top, I mean, you could say we completed it here, but it was just for a brief moment, came back down, tried to reach it, no, we couldn't do it. We just cannot reach these all-time highs from before our drop of November 2021, right? 2022 into 2023, basically, I mean, it was just 2022 mostly, was just horrible. So the stock market dropped a lot, but as you can see, the Qs is also interesting. We complete these triangles most of the time, right? Once we complete the triangle, we have a major drop. Now, these are all going to be 10% or more because the Qs obviously is not as volatile, so it doesn't go down nearly as much. Every time we get out of a triangle, we complete the triangle and we get out of it. We go on a run. We go on a run. We go on a run, right? Look, we complete the triangle. We're on a run. Right? We are running away with it. Now, obviously, this is just a full-on run the whole time, but that's because we were coming out of that huge inflation and interest rate, just horrible 2022. But still, once we completed it, even after a full, started in December 2023, basically, for a full year, we were on a bull run, and we still went on a big run after for the next 175 days. So we've now basically completed this triangle. Where are we going? Now, there are times where we kind of reach out and then we come back down, and I kind of pick a point where we don't really, reach this point again. So we could come back down. But the chart, and this is not economics, this is not anything else, this is just the chart. The chart is telling me that we are about to go on a little bit of a run for the next few weeks. The next few weeks is going to be a run, maybe up until sometime in August. There might be a time, maybe even late July to sometime in August. Now remember, August had some of the worst, was it August or September? I think it was September actually. But August and September are actually bad months when you look at the average performance of a stock. The end of the summer and fall is actually a bad time in performance. So if we go on a run here in July and into August, I will be looking at a slight correction happening. It doesn't mean that we're going to have to fall back into another triangle and go down 10 to 15, 20%. But if we go on another massive run like that, if we do go up, because this is what we went up 7% before we dropped back down, and went up 22% before we went back down. Here we went up 20% before we went back down. Here we went up 10% before we went back down. So, it's just about where are we going to land in terms of, are we going to go up 5%? Are we going to go up 10%, 15% before we make another 10% drop? Oops, let me do this. Go, look, it's 5%, right? We can go 5%, 10%, or 15%. Which one do you think we're going to hit first, 5, 10, or 15, before we make another drop? Because if you're going to tell me that we're not going to have another triangle, you could just move on, because we will. We're going to have another 10% drop at some point. It happens. As you can see, this one happened over here, September 2018. Then we had another one, February 2020. And we had another one, August 20th, 2020. February 2021. So we have 1 or 2, maybe a year, right? Okay, is this our one for this year? So, all right, how long? For the next how many months do we go? And it doesn't mean, I want to make sure that it doesn't mean I'm saying August we're going to pull back another 10%. August, September, we're going to pull back 10. No, what I'm saying is we could go on a pretty good run for the next months, actually, for a while. But I believe since we break this all-time high, we could end up having a little bit of a high and a little bit of a rush, and that's going to pull back a couple percent. But again, over the long term of this year, I think we're going to go on a decent run over the next few months. But I don't know when there will be a slight pullback where people might, freak out for a few days, maybe a week, and then we go back on that run. So we're still going to be on this run. But again, but which one do you think we're going to go at, right? And then how long does it go? This is 71 days. Do you think, this is 83 days. This one was 175 days before we had a crash or a little correction. This correction was about 7%, right? And it lasted 56 days. So I wasn't concerned about that one. Anything that's 10% or more is what I was looking at. So again, where do you think we're going to land? 5, 10, 15 before we actually have another correction, and how long is that going to last? I don't know, but I would say we're going to have a good couple months. But yeah, if you liked all that I had to say, please give it a like and subscribe. And yeah, I hope you enjoyed that video. It was, again, longer than I wanted to. It always is. But yeah, this was my update. And don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities. And you can count on compounded interest.